going to start off with a very brief introduction of myself, but then we're going to hand it over to our guest here today. So as you all know, this webinar is between us, Aprao, and the RICS, with Andrew Knight, who you can see on the screen, who is joining us. Just to give you a bit of background on Aprao, we are a financial modeling tool for real estate. We're a cloud-based B2B SaaS business. We've developed a development, appraisal, and feasibility tool, which allows you to run financial models with more accuracy, consistency, and efficiency in the cloud. So we're used by property developers, valuers, surveyors, all sorts of people in the property industry around the world, and it's a fantastic tool. So if anyone here is not already a customer or had a look, anyone on this webinar can sign up to a free trial following the webinar. But that's enough about me. I would like to introduce Andrew Knight. He's with us here today, and Andrew, welcome to the webinar. I'd love to hear a bit of your background and give everybody on the webinar a bit of your background.
Thanks, Daniel, and I'm really glad to be here this morning. Yes, I'm Andrew Knight from RICS. As you know, RICS, worldwide professional body and a very broad church of professionals working not just in the UK but globally. I work within the directorate that looks after standards, regulation, and also thought leadership. And my role is to look at what feels like an enormous job to look at the implications of data and tech for the profession, and indeed how we regulate and how we produce standards, and how data and tech is changing the way surveyors do their role and the way the industry works. So a huge role in that sense of looking at such a broad area. I'm not a chartered surveyor. I've been with RICS for 10 years, so there are days when I do feel like a chartered surveyor, having gained so much experience in working with internal colleagues and external stakeholders. My background, if you go back long enough, is a technical one, back to the days when computers were very different beasts. So I've seen waves of innovation and adoption, sometimes crash and burn, but other times being very successful in various sectors. So it's a really interesting time to be looking at data and tech for a sector that arguably is perhaps behind the curve compared to other sectors. But I think we'll talk about that in more detail in a few minutes, Daniel, won't we?
We will, yeah. So it was, a recent conversation I had with Andrew, where we were talking about us as a technology company. How can we do more with the RICS, and how can we look at, progressing technology in the property sector as a whole? So that's why I thought this would be a really interesting topic of conversation. Starting with that point then, Andrew, I was having this thought the other day, and I was thinking, okay, where are we today with technology? And in order to understand where we are today, I started to look backwards. And I thought, okay, over the last decade, what's actually changed in the world of property when it comes to technology? And it definitely got me thinking. So I'm going to open that question to you. I mean, what do you think have been the biggest advancements, or what's changed in the last decade in the world of property?
Well, it's funny when you ask me this question, I kind of struggle, because it's one of these things where a lot has changed, and in some respects it feels like nothing has changed, because lots of things have become available over the last few years. And I think what perhaps is the biggest challenge that remains is that the adoption of that is quite patchy, to say the least. That we have obviously a very, very fragmented industry in many ways, and I think that means, even if you just look at one particular market, there's been some tremendous advances in technology. I mean, let's think about the way that BIM has been adopted in many ways from the construction point of view, and that's beginning to make a very positive impact in the operational phase. But there are still many participants who don't use BIM. So whilst BIM has been available a long time, it's not necessarily heavily used. People are clearly using automated valuation models very much in the residential sector. There's work now obviously developing in the commercial side, but once again, that's not fully adopted necessarily. Like all of us, handheld devices have allowed surveyors now to do many things on site that they couldn't do before, and I think that's been well adopted. We obviously have, for high-end assets, we have digital twins. There are very numerous instances of where smart buildings can have that kind of interaction. But once again, one could argue, if you looked at the full range of real estate assets, that's still a very niche operational piece that's actually been adopted. once again, people have been using AI in the last few years for lease abstraction, for many purposes, to look at data. And once again, that adoption is taking place, but it's still arguably, if you did a statistical analysis, I'm sure you'd find that in most cases it's not being used. Certainly we are using 360 cameras a lot. I mean, there are many instances now where you can have a doll's house and a walkthrough when you're looking at buying a property. So there are lots of instances where technology has, just like in our private and other business line worlds, been available and adopted. But my look back is almost not so much missed opportunities, but the fact that actually we still have a lot of work to do to take advantage of actually technology that's already been built. It's almost as though we don't need any more technology. We need to think, how do we actually now apply this consistently across the workplace? And I guess, clearly what has been a great advance is to see all the external input, if I can use that phrase, the innovators that have come out from outside of the sector and brought new ideas, fresh technology, moved transferable technologies into the sector. Not always successfully, but in many cases, I think that's been a healthy injection of innovation and disruption to make us think as a sector that we should and can do things differently.
Yeah, definitely. So, okay, when you were speaking then, it was making me think about there's innovation, but it's been in really small pockets of the development or the real estate ecosystem. So like you said there, with like a Matterport or a virtual walk round of a building, for example, that is this a fantastic bit of innovation in a very small part of the overall puzzle. So it feels to me like there's been innovation happening, but there's not yet been a kind of a wide adoption of a wider ecosystem, which I'm sure we'll come on to. And my next question is, okay, do you think a property transaction today is taking longer or the same or a shorter period of time than it was a decade ago? And has technology added any efficiency, or has it not?
I would think that, I mean, sometimes there are other variables, but I would say that actually doing deals, and obviously commercial real estate very different from residential real estate. I think deals and thus the due diligence process, I think is probably generally taking a similar amount of time. I think it's one of the great opportunities moving forward is to speed up the kind of data room type concept to make sure that we have the right data, not just valuation data, but all the underlying data you need to look at an asset to make sure that that transaction can take place much more quickly. And that's as true for commercial real estate as it is for residential real estate. And I know a lot of activity in the market is looking at the various things that we need to put in place to make that kind of transaction quicker. And I think there's a danger in almost focusing on the actual transaction itself, the actual, doing the deal, thinking about some of the rhetoric around blockchain and that kind of thing. It's not so much that. I think it is that due diligence process, whether we're buying a house individually, which will obviously be our biggest purchase ever as an individual, or whether it's a commercial real estate asset, we're talking about a significant commitment and a significant piece of due diligence. And if we don't have the data available in that kind of data room setting that can be put together quickly, that can be trusted and assured, that process will always take some time. And I think that's a big opportunity to make the whole asset class much more liquid and transparent and easier to transact in that way and safer to transact.
Yeah, I think that's a good point. And the reason I asked the question is when I was analysing being involved in commercial deals from the kind of early parts of my career, just over a decade ago, to where they are today, I don't feel the speed has actually changed that much, and so I was interested to get someone else's point of view. But I think not necessarily the speed as an efficiency side of things, but actually starting to kind of see the efficiency within these certain parts of the process. But because there's still so many people involved in any transaction, whether that's a personal property purchase or a development, residential development, or a commercial building, there's so many stakeholders and people involved in the process that communication, I guess, plays a major role. And that's something email was still around 10 years ago. And that's still the primary method there of communication across property transactions, and that's not yet had not shown any massive efficiencies as a result.
No, I mean, I suppose in some respects that's perhaps a red herring, because I think if you think that the issues for me, as I observe them, are the sort of the time at which pieces of fact around an asset emerge, and it's the classic issue where a valuer will only get the title report late in the valuation process, and suddenly is asked to look at the valuation given they've finally seen the title report around the lease. So it's those issues of actually data availability, and also when that data is available, because people will be waiting. As you say, there are a number of stakeholders in that transactional environment, and if they all had the right information early in the process, I think however you communicated, whether it was email or a telephone call or whatever, I think the process would be quicker. I think it's that assembly of information and the timing of the arrival of that information that I think remains the biggest barrier. And that's not to say that workflow couldn't improve, that the way we share information, the way we actually communicate would make the transaction quicker. But I think fundamentally it's that assembly of information.
Yeah, no, I agree with that. So we've had a question which is particularly relevant, so I'm going to throw it into the conversation. So from Matt, he said, what do you think the reason is behind slow adoption of certain technology / adopting, but not using technology to its full potential? So a very, very interesting question.
I think there was a number of answers, but from my perspective, I think in some respects, the risk of being slightly pejorative, that the sector has been pretty conservative. It hasn't changed in many respects for quite a long time, the way things are done. It's I think one of the nice things about the sector is it's quite a people business. So I think there's perhaps a natural, not so much aversion, but it's about people dealing with each other. And I don't think it wants to be seen as a commoditized piece. If you look at the residential sector and look at the rise of the kind of hybrid or online agencies, it's interesting that although the platforms and technology is there, the actual demand to have a purely online kind of experience is not. People want to have a local agent still in many respects. They want to have somebody involved. So I think there's a certain element of sort of behavioral barriers. I think it's a very fragmented industry, which means that you don't have the ability for simply a few major players to simply just adopt technology and the market moves on. I think because of that, and I don't think in any way that SMEs and smaller practitioners are particularly tech averse, but I think obviously with lots of smaller firms operating in this sector, it is harder for them to absorb new technology and adopt it. They don't have IT departments, they don't have R&D people. So I think that's a barrier to adoption, that simply the market is so fragmented in that way. And I think there are also, dare I say, to some extent, behavioral interests around maybe not making the asset class more liquid, and perhaps stepping on some toes here. But I think there are market participants that certainly would arguably benefit from the kind of information asymmetry, that information isn't freely available and shared. And I think to some extent, and certainly from an investment class perspective, people value the illiquidity premium you get from an asset type that is not easy and quick to trade. So there are some kind of barriers, I think, in terms of the way commercial real estate particularly operates, that does limit that. And I think also if you look at the construction sector, for example, it's historically had a very low R&D budget. As a sector, we don't invest in R&D, and I don't think that's helped, the adoption and the adoption of new techniques. And on a personal note, probably I'll get Bill Gates will shoot me, but Excel doesn't help from a data perspective. We have silos of data. Everybody's got their own Excel spreadsheet, whether it's in the construction sector or valuation. So if we could force people to stop using Excel and begin to think about how they store their data, that might help as well.
Yeah, definitely. And I think you raised a very good point there. The grey area that operates in the property world, or in terms of the lack of transparency, sometimes is some people's advantage. And there's something that's changing, and I genuinely believe that a younger generation coming into real estate or property will see that the benefits of having that open communication and full transparency on a transaction, I believe will open up the market and create a better market for all. I mean, there's one theory that I've come across with this in terms of the adoption of technology, and I think that fundamentally, real estate is relatively lucrative as a sector. It generates a lot of money, and people make a lot of money from it. If there's no real pressure to change anything because people are still, making money and deals are happening, then there's no need to change. But what I predict we'll see is people adopting technology, being able to move on deals faster or go through quicker due diligence processes. And then the people who have not adopted technology are missing out on those opportunities, or maybe not realizing the full potential of a site that somebody else was able to see because of the tools that they were using. And that's where people start to feel left behind. And that's where they will start to accelerate with the adoption of technology to make sure they're not missing out on these opportunities.
I would agree. I think externalities will be, I think, a big driver. As you say, I think by reducing transaction times, reducing the cost of due diligence, that will force change. I think also some externalities around the ESG agenda, which I think will demand from a social good much more transparency on the performance and operation and costs of real estate, I think will be a driver. So I think there will be some external factors, which I think personally are healthy, that will drive that adoption. Because as you say, if participants are making a good return on investment in a particular process, there isn't a great driver. But I think a combination of external factors, I think, will force change. And it's interesting that the behaviours do change. In a previous life, I worked in FMCG, and this was back in the noughties, where we had a room full of Linux boxes doing regression analysis on consumer behaviour, and that was pooled data by from competitors who pulled all their data and realised that having that view of the market, a much bigger view of the market than their own particular silo, was worth the competitive risk of pooling and sharing data and having a much more transparent data pool. So I think the industry's got some way to go, but I think a mixture of enlightened self-interest and external factors will drive adoption.
Yeah, definitely. That's an interesting comparison with FMCG to see, because a lot of the time people draw parallels with real estate and other sectors, saying, look how far, healthcare has come, or, telemedicine, or, seeing your doctor online, that kind of thing. And or even finance. But then when you're coming into the real estate world, it's still, at least 10 years back. So it's interesting to draw that parallel. Okay, so this is a question obviously to you, Andrew, but also anybody else, feel free to throw in your answers in the chat. What technology right now is making the biggest impact? And then in a bit, we're going to look to the future and the trends and what we think are coming. But I'm really keen to know, on property deals and transactions that are happening now with people, what technology is really making a difference? Is it electronic signatures, for example? We've recently done a deal ourselves, and everybody's fully distributed around the world, and we're able to sign a document that previously needed to be couriered. So that, as an example, is not directly related to property, but it's unlocking certain things in transactions. So so I'm opening the question. I'll start with you with you, Andrew. But
it can be some of those prosaic things. It's a bit like the paradigm in cycling, that kind of marginal gain things, that you're getting all these little things that actually are making things a lot smoother. So that ability to move away from wet signatures, and to some extent, rather sadly, COVID has been a positive, as in a driver to these kind of things. And I know, working with Land Registry in the UK market, that they simply had to accelerate that ability to move away from wet signatures just to keep the wheels going, as it were, from that point of view. I think whilst we're not there yet, I think the huge amount of work that is going into making data available digitally for assets, I think is having a huge effect. It's taking time. There's still a lot of data that's not available digitally, but the work around lease abstraction and getting structured data available, I think is having a huge gain. I think the very prosaic end of surveying, with the remote tools that are available in terms of, excuse me, being able to do a lot more surveys with handheld devices and use drones, and I think that ability to perhaps record a 360 view, not just for a Matterport sales survey, but be able to go on a site, do a survey, and watch that survey with various stakeholders off-site. There are a lot of very practical tools that are having a big gain. So I think And I think BIM, is beginning to deliver now. I think when you look at the ability of BIM, as all the BIM vendors are doing, to move towards 5, 6, 7D, as they call it, to begin to join together not only the construction data, but move that into the operational phase. And once again, COVID is driving that in terms of the ability to understand how buildings are performing in terms of ventilation and temperature. I think that move from BIM being a construction tool into BIM being a tool for the whole life of the building is driving a lot of benefit. But I think it's a number of things. It's quite prosaic tools out in the field for surveyors. It's a lot of the work about getting data into a much more standardized, consistent way that we can use it, and much better analytics about market level data, which is helping the valuation profession. So I think those things probably I would highlight.
Yeah, definitely. And there's a question that's come in which is relevant to this. So Lionel's asked, there's one major issue in the fact that there's a variety of programs being used by surveyors. Therefore, there's a difficulty in standardization. He was asking if there's any kind of view from the RICS to look at a way of standardizing that data to therefore unlock the data sharing so it's in a more of a standardized format. Something that's close to heart for us, because that's one of the things that we believe in. I mean, prior to starting Aprao, I worked in development finance as a lender of development finance, and I was receiving deals from developers every day looking to secure funding, and everybody was sending me their projects all in Excel spreadsheets, but in totally different formats. I mean, that's obviously not coming from a surveyor, but that's coming from developers. But everybody's trying to achieve the same thing, but they're all going about it in a different way. And that was why I set on the quest to basically help introduce some standardization by saying, what would I, as a lender, want to see on, whether it's a single page or in a full breakdown of information? What are the key data points that both me and anyone else on the project, whether that's the valuer, the cost consultant, the bank, whoever it is, what are the things that people want to see? And so that was a key starting point for us.
Well, it's interesting that it's a nice question to have, because it's a nice sort of ball to be thrown. We actually have developed an RICS data standard. That the challenge is that, as everybody has articulated, there are lots of different approaches being taken. There are no real genuine single standards out there. Everybody's building their own systems and their own architecture. And it's also multiplied when you go around the world, because every jurisdiction will have somebody who's built something either proprietary. The Dutch banks have done something using XBRL for their valuation process. And unfortunately, for better or for worse, we've also entered this and said, actually, well, as a worldwide professional body, coming in from a standards perspective, we've built a JSON and an XML data standard that says, almost like a Babel fish, if that will age me as a reference, but for those of you who have read Hitchhiker's Guide to the Galaxy, we've created what we hope is a Babel fish to say, look, this is a common architecture for effectively a due diligence framework. It's information on tenure, all the participants in a particular property, obviously the physical attributes of the property in terms of size and floors and floor plate, life cycle costs over the whole building, who are the occupiers, what are the lease extracts of the lease, what's the debt secured against the building, so a debt model as well. What's the land? What's the the geospatial coordinates of the land? What are the what are the kind of title issues? So a kind of a full due diligence checklist almost. So it's quite a big data standard, because it does go right through sustainability issues, high level targets and kind of IoT like data points. So it's a full due diligence framework for what you want to know about land and property, and hopefully acting as that kind of Babel fish, because not only do you get kind of jurisdictional data standards, but you also, obviously, with a number of PropTech startups, quite understandably, they all build their own architecture, they all build their own internal systems. And so what we're hoping is that we can be that clearinghouse, almost an API approach that says, okay, well, here we are, here's some data, here's a valuation set. At least there's a common meeting point for exchanging data, because we also believe that to assemble data sets to support various use cases, there'll never be one single data repository. And if you think of a data room, you'll be pulling in data from your local cadastral land registry for tenure information, you'll be pulling in lease information, you'll be pulling in covenant strength information on the occupiers, you'll be pulling in costing information, you'll be pulling in a link perhaps to the BIM model, you'll be pulling in geospatial data. So you're always going to be assembling data from different data points. And that's where you also need, thinking of the UK market, for everybody to start using the UPRN in their data set, so that we've actually got a common ID and we're sure we're talking about the right asset. Or indeed, if we're talking about a residential block, we understand the information for the block as a whole, and then we understand the information for the individual units thereof. Or similarly with a, with a shopping centre or a large sort of complex asset. So we have done a lot of work in that area. We're going to release a new version very soon on GitHub, because we do want to have some consistent architecture for exchanging data, because you're right, everybody's doing the same thing but calling things different names.
And that's actually really relevant to the point that Matt just raised on the chat. He basically saying, is there a key point that you're hearing about with tech solutions? Are there things tech firms can provide to the industry that would help solve these, e.g. ease of connectivity or connecting systems together and communication flow? So like you said, they're having common identifiers to be able to link all of this data as to a common link is definitely something that must be needed out there.
It's critical, because and there are also governance issues as well. We mustn't forget the privacy and the governance issues about real estate data, and make sure that's properly governed. It shouldn't be a free-for-all in that sense. But some of the key things are not only having a unique identifier for property, so that we know we're actually transferring information about the right particular property, but also dealing with the participants and understanding their digital IDs as well, and making sure that that's governed in the correct way. So yeah, in terms of what industry can do, I think it's about having open APIs, understanding that they will be contributing to this kind of archipelago of data. That there'll be these, if you think of, the data you'd pull in from perhaps Environment Agency around flood data, you might even be pulling in from the Geological Survey for radon daughters if you're looking at a residential survey, obviously Land Registry. You might want to pull some Ordnance Survey data in. You'll be pulling data in from third parties around perhaps connectivity. You might want to bring in the wired score or find out the EPC rating. All these things need to be brought together for various use cases. And so I think we'll always be looking at probably quite a complex landscape of data points, whether they're proprietary ones or arguably, government agencies where there's some degree of open access. And what we need is APIs where we can agree to call things the same stuff and coalesce around things like the UPRN in the UK to understand we're talking about the right asset.
For non-technical people on the webinar, API is basically a way of one piece of software communicating with another piece of software. So, but that's it's a really important point. And just to kind of add some context to that, us as a financial modelling tool, we are looking at integration. So we're talking to another British PropTech company around designing and massing of buildings, and how that can directly link into the financial model. So you could be designing a building, expanding it, doing the massing study on that building, and then understanding real time, based on some assumptions, but real time as you're making those adjustments, what A, the residual site value is, and B, what sort of profit metrics you're going to make. And when people are doing portfolio analysis and really trying to understand the effects on a portfolio and which sites have the highest potential, just literally by connecting the data like that, it cuts out a massive amount of work where you do one process, you park it, you take the numbers, and then you manually enter them and do them in another part of the process. That's just one small piece of the puzzle. So I can really see here with some more standardization and these APIs allowing all of this innovation to talk to one another, that it can really start to bring some efficiency to the entire transaction in time. Right, we have we've got a question from Tom, who says, really interesting discussion. Thanks, Tom. Basically, it's talking about uniclass. Uniclass describes, e.g., a door, but doesn't capture the condition of the door. So this is an area I know nothing about. But Andrew, I don't know if there's anything that you're able to add to Tom's question.
Yeah, thanks for that. I mean, our data standard work, we certainly nod towards things like uniclass. We're not going down to the granularity of BIM models. In fact, I'm specifically working with Building Smart International to kind of align our data standard with IFC to make sure that we can kind of have our data standard operating at a level of due diligence, but still be pointing to the kind of objects you'd see in an IFC model, down to ultimately that level of granularity, as you say, about a door or a beam or a window, what it would be. What we have addressed in our data standard is actually objects around the concept of condition reports, as in almost the old-fashioned surveyor comes in, walks around the building, taps things and checks for damp and stuff, stuff like that. Obviously, it's a much more technical process than that. But joking aside, whether that condition is coming from an IoT sensor in terms of that kind of preventative maintenance perspective, or whether it's coming from a more manual condition report, what our data standard allows you to do is actually look at any level of object within an asset, whether that object could be as granular as the roof as a whole, or as you say, a specific component. So it could be down to a particular door fitting or a bit of window furniture. So our objects are very generic and just say, look, there's an object in this building. You could link it to the BIM model as well. But what you'd be saying is actually, here's an object in the building. Here is its current condition. Here are the risks associated. Here are the repair costs. Describe the object in terms of what it is. Or, if it's a manufactured object, if it's a lift system, whatever it might be, you could reference the manufacturer and all that sort of stuff. But it allows to have quite a sort of a generic object condition element that says, okay, here's the object. You could indeed link it, as you say, to a BIM model and a classification like Omniclass and say, okay, here's an object and here's the current rating in terms of risk and issues around it, and indeed costs and stuff like that. So we do recognize that kind of concept. And I suppose that's where, as BIM begins to evolve into this more sort of operational phase, obviously I can see BIM beginning to look at that more conditional type role, as well as just simply looking at it from a kind of design perspective. Hopefully that answers your question.
Well, I see BIM at the moment. Obviously, it comes up a lot, and BIM is currently used in the design process, but it seems to stop. For most cases, it seems to stop there. But the full potential of BIM takes it all the way from from beginning of the life to through the full life cycle of a property. So I feel there's
exactly. I mean, if you Google and look at concepts like BIM, 5, 6, 7D, you'll see how BIM can evolve into that whole time, cost, operational, sustainability, performance phase. So it does have that potential to be that whole life cycle model for us.
Yeah, no, I think that's exciting. So on that note, let's start to move the shift from the past. We're talking about the present, but let's start thinking about the future. So, okay, I asked you the question about a decade ago. What will a property transaction look like in a decade's time?
I would hope that I think the kind of things we've already touched on, this ability to have a digital data set for assets, will be realized, and hopefully far before then, because we do live in a world where a lot of the data is still, I would argue, effectively pieces of paper. We might get it as a PDF, but we still get pieces of paper. I mean, I talk to commercial real estate funds and asset managers around the world, and in advanced economies. I remember a quote last year, some person in Switzerland saying to me, I get, large euro deals coming across my desk, and I still have huge gaps in the data, and the data I do see is still effectively pieces of paper. And if you look at the residential sector and look at the way that's transacted, so much information, even if it is on a digital form, then it's still effectively a copy of a document. It may be a copy of a title deed that's effectively a scan. I mean, I tell an anecdote about my personal property in the UK, where there's something called an Article 4 directive around what you can do in a conservation area. And I finally found this sort of piece of information that was relevant for some work I was doing on my house. And that information was held on a PDF, and that PDF was a scan of a 1990 typewritten document with pen annotations on it to show which properties were affected by the Article 4 direction. Now, that's an extreme example, but when we think that, you think of the intricacies of commercial leases and think that we need to get that information in a form that can be analyzed quickly, either by people and or technology, and that we need all that information around a particularly complex real estate asset with multiple leases, multiple occupiers, we need all that information to enable that due diligence to take place. Similarly, we need the condition report on that property to be not just a PDF report, but to be provided in a structured way so we can run analytics, we can we can do that kind of thing. And obviously in your world, Daniel, we need the comparable evidence, we need all the market metrics, we need all those drivers that will go into whatever level of sophistication we have for valuation models to be available in a structured way. And as you say, you don't want to get a bunch of spreadsheets coming in when you're trying to look at comp evidence or market evidence about how long it takes to fill a void in that market and what the market rents are and what the comps are and how you adjust the comps. So for me, I think we will get to that point, but the key preliminary, the key criteria we need is we need to digitize data on real estate assets. And I think that will be a long journey because there's a lot of work to do there, a lot of connectivity as we've just discussed, but actually a move to get this data into a much more structured form, whether it's leases, condition reports, all the kind of data that we would want to see about an asset before we buy and sell it or indeed rent it.
Yeah, I think there's an interesting point there that you raised, Andrew, around how a lot of the data is essentially a piece of paper, whether that's a digital piece of paper or not. It's not a data point that could be used by another tool or another system and ultimately create a digital conversation. It's still a piece of paper or something being displayed to a human being who's interpreting that information and then using that in another step of the process. And that does tie into Daniel's, there's been a question coming from Daniel, who's basically said, once you're looking at all your subscriptions, maybe this is you negotiating on a discount, Daniel, but when you've got your Aprao subscription, your Dacia, your CoStar, etc., the monthly overhead can be enormous, and particularly for small businesses. So I guess he's asking if there's a solution that helps kind of like standardize or make the almost like a suite of documents, a suite of software or programs. I think thinking about that question that Daniel's raised there, I think that the easier the information flows, the less siloed information there is. So you don't have just Aprao's information, CoStar's and Dacia's information, but there's a flow of information between all parties. I believe that will break down some barriers in terms of kind of ownership of customers and price around specific products and creating, adding valuable data points into other platforms so that maybe the companies providing those data points can still benefit financially, but also from a user's perspective, you don't need to have all of these separate standalone subscriptions. So I think that comes again back to the API point, and that's another sort of business model for a technology company. It's not even providing the actual software itself even, but actually providing data through APIs, like what's been happening with the digitization of a lot of the land data in the UK.
Yeah, Daniel, I don't know if I could chip in there, Daniel. I mean, I'd almost say there's an almost more fundamental point there about the market currently placing value on the data rather than the analytics. And I think, there's an argument that if the whole market becomes more transparent, then the data will become not only technically more easy to access, but just simply from a price perspective, more available, and that actually the business model, one could argue, would have to change in terms of charging for the analytics you provide rather than, and I'll use the word advisedly, hoarding the data and saying you can't have the data until you pay me. Because, and I think that I think we'd be quite honest here, particularly in commercial real estate, that the elephant in the room is this, the difference between the headline rent you see and the effective rent, and the ability to really get effective rent information, for example, when that is very much hidden by commercial confidentiality and people perhaps not wanting to share effective rents, but quite happy to share the headline rent. And as we know, that difference between headline and effective can be very significant and becomes more significant as leases become shorter and premiums are higher. So I think that there do need to be some behavioral shifts as well as technology shifts to make data ironically less valuable, but to people understanding that it's actually the analytics that is where the value is, and the base data is just base data and should become more transparent. But that will require some behavioral changes which are harder than just the tech.
Yeah, definitely. So phase one is connecting that base data. Phase two is unlocking the analysis on that data. I like that. And it ties in. Matt said, he asked the question about the connectivity of data, but he said he had to take a call and missed the answer. But I think a really good summary to take away from that point here is that the prediction of the future is unlocking that data to be able to connect multiple platforms and tools to be able to create a more seamless user experience throughout the entire transaction. To bring this to the kind of RICS, and we're nearly out of time. So I think what would be quite interesting, just a bit of an open question, is what does this mean for a chartered surveyor? There's quite a few on the call today. Not everybody is, but for the chartered surveyors that are, what does this mean? Are they going to be, out of jobs with automated valuations, or what does this look like?
I think the evolution has always been taking place, and I think that one can't stop the tide, as it were. I have a very positive view. I think for all my interest and passion in the benefits of digitization, I still think that this information, and I know it still needs to be assured in a commercial setting. It still needs to be curated. Just because information comes to you digitally doesn't make it correct. It doesn't mean that you can sue Excel if it produces an incorrect valuation. Yeah. I think there will continue to be an incredibly important role for a profession working to standards to curate and assure the data, to make sure that actually what you see in these data rooms is correct, has been analyzed correctly, has been looked at. And we've talked a lot about the potential to produce structured data. I think that will have its limits insofar. I am sure there will always be issues where one needs to go back to the original lease document, where one has to go back and look at the individual occupiers and their covenant strength and make some judgments and apply some judgments to comparable evidence. I think technology will augment what the surveyor does. What I hope is that the more, dare I say, tedious tasks that surveyors currently have to do can be taken up by technology, so that acquiring and analysing data can be to some extent automated, but the surveyor can actually move up, to use the cliche, move up the value chain and continue to provide valuable professional advice. And it may well be that, yes, AVMs do a higher proportion of the valuation work, but in the valuation context, I know from conversations with private equity, for example, they look to valuers to provide that forward-looking advice. Well, okay, yeah, let's mark to market today, but what they want to know are, what are the options? What are the scenarios to drive value from an asset over their holding period? So say they're going to hold for 5 years. What they employ valuers to do as well is say, okay, talk about business plans. What can we do with this asset to look at what that terminal value and terminal yield will be? Yes, there's a mark to market, which you can do to the Red Book, and that will increasingly be supported by technology. But actually, let's look at scenarios. Let's look at what we can do with that asset that would increase value, given what you know about the market, given those kind of valuable insights that a valuer has. So I think roles will evolve, but I don't think it will remove the requirement for a profession to measure, to assure, to report, and stand behind their opinions, but use technology to help them get to those in a perhaps more sophisticated, productive way, and allow them to spend more time doing the interesting, exciting professional advice, rather than working through spreadsheets and trying to get data and trying to do that kind of underlying stuff, which frankly, I'm sure they'd rather be doing the higher value things.
Yeah, and just as a direct example there, we've got chartered surveyors who are doing valuation work, that development valuation work on Aprao. Talking to someone recently, they're using it on their iPad or their tablet. They're out on site. They can start punching in some headline numbers into Aprao on their iPad. They can have they can essentially have a valuation report ready to go without the need to wait until they're back in the office. They can also share that with colleagues remotely, and then also in literally one click, you can have a perfectly formatted report ready to share. So I think you said you're not spending time formatting spreadsheets, a Word document, again, sorry, Bill Gates, but going through all of the kind of more manual tasks of making things, preparing a report, when in actual fact, you should be using the human time to provide your insight, your skill and your knowledge and your professional advice. So I think that actually what we'll see is a more more effective use of human time, rather than the inefficiencies that have been created with some technology in the last decade, which have actually slowed people down rather than sped them up in some regards. So look, we're pretty much out of time now. If anyone's got any final questions, feel free to throw them in. Lionel has said, agree with Andrew, the RICS will always control ethics and therefore the quality of the advice. Daniel said, they do say that valuation, for example, is an art and not a science, which is so true, and limit the absolute replacement of surveyors' professional expertise for some auto-generated valuation systems, which must rely on their absolute variables. I think that's actually a really good point. There's many factors to take into evaluation, not just the pure material kind of data points. There's the human element there, and as Andrew touched on, the vision into the future and the interpreting of that data without going too deep into AI. I think the human brain still possesses more power on that side of things. But Andrew, is there anything you want to wrap up with?
Yeah, so just following on that point, that the art and science point, the value will still have, I think in resi, you can imagine where, particularly for refinancing, where when an ABM produces a number that, given the LTV, the lender finds very comfortable in the kind of a secured lending perspective. But for more complex assets, there will always be a role for a valuer to look at the data and make a judgment. And you see that's where the kind of the term art comes in. I personally don't like the word art. I think it's more about professional judgment, looking at the way to apply yields, et cetera, looking at the evidence and making those kind of judgments, because as ever, a valuer still needs to justify and explain the rationale of their judgments. But I think, as you said, Daniel, AI does have its limits. It's very good at certain narrow tasks, but it cannot replace those kinds of judgments based on knowledge and experience.
Yeah, definitely. Maybe that's one for the following decade, and we can get there. We'll pick up the conversation in 10 years' time. Look, Andrew, thank you so much for joining me in this chat. It's been absolutely fantastic. Thoroughly enjoyed it. We've got a few thanks coming through in the chat. As I said, we're going to have a recording of this, so if there's anyone that you think would find this useful, you can obviously share that. We'll share this with you afterwards. Feel free to share that with anybody. But most importantly, I just want to say thank you, Andrew, for joining us. It's been a really great conversation, and I look forward to seeing where the RICS can help take the technology forwards, with companies like us also playing a part. It's definitely an exciting few years ahead.
Pleasure. Thanks, Daniel.
All right then, take care, and thank you everybody for joining. Bye.
Bye.